It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Well, this is Esther Gulius Tax Service. Give us a call, 803-0930. We'd love to take your call on the air. It is tax time. We want to help you. You know, whether you're our customers or not, it's your money. We want to make sure it stays in your pocket where it belongs. So give us...
This is fine equipment we have here, right?
Yep.
All right, anyway, we're talking taxes. I'm Esther Gulius, the tax lady from EG Tax. Is that better? I can hear me now. We want to answer your tax questions, and we got all of our offices open. We're open tonight 9 to 9. And all next week, 9 to 9, and we can get her done. So we're going to talk today about what is a tax bracket. I got Chris Fabian here with me. We're out of the studio.
Hello, Esther.
Hello, Christopher. Is your mic working?
Now it is.
Okay. All right. How's that all? Are we good?
Are we good in the booth?
Okay. Anyway, Jay, are we ready with some phone calls? Okay. We're going to go to line 1. Hi, I'm Esther Gulius. How can I help you?
Hi. My federal income is less than $11,000, so I don't have to file a federal return.
That's correct. If you have no withholding.
Okay. And it says even if you do not have to file a federal return, if your income was more than $4,000 plus New York State additions, you have to file. They don't say anything about the New York State subtractions. I have IRA and savings bonds. I would presume it's the federal less the
right. You're correct. Can't hear anything.
Hello.
Okay, so yeah, so if you have
my board went down completely.
If you have just the bonds and the IRAs, then right, you don't have to file. I mean, you could file.
You don't have to claim. You don't have to file New York State or federal. So don't worry about it.
My only income is interest, and that's less than $4,000.
That's right. You're good to go. You don't have to worry about it.
Just another quick question.
Yeah.
Since the standard deduction is $7,900, why would you have to file?
You don't have to file.
I know, but they say if I say my income.
Well, because for instance, a child's standard deduction is $3,000 if they're claimed as a dependent on their parents' return. But in your case, you do not have to file.
Thank you very much.
You're very welcome, dear. We were just having some technical difficulties. I'm Esther Gulius, the tax lady from EG Tax. Let's see who's next. Dave in Hamburg. Hey, Dave, how can we help you?
I was wondering, my daughter's 16, and she made $4,800 last year.
Okay.
And I'm wondering if I can claim her on my taxes.
You sure can. As long as, does she live with you, Dave?
Yes.
All right. And she's not furnishing over 50% of her own support, so certainly you can claim her.
So what is, if I claim her, how does she file?
She's going to file her own return, but not claim her own personal exemption. That's going to you.
Okay, so she could still file her own.
Right,
she is,
right.
And she's going to get her refund back.
Federal, she'll get everything back. The state, depending on her withholding, because that's what Esther was just talking about with the previous caller, it's a $3,100 standard deduction on New York State. So if she made $45,000, she may end up owing New York a little bit.
Right.
Yeah, I did her separate, and she owed them a little bit.
That's right. So maybe what you want to tell her to do is at work, just have an extra couple dollars a paycheck withheld for New York State.
Right. And then, she could just file hers like 1040 or something.
That's right. She files hers. She does not claim her own personal exemption because you're claiming her personal exemption, and she's under the age of 17, so you're going to get the $1,000 child tax credit as well. She wouldn't get that, so she's going to file her own return. You're filing a return with her as your dependent.
Okay. And what's the personal deductions? That's just
it's $4,050.
Okay, yeah, I think she was 4,800.
Well, no,
Oh,
her
her standard
standard
deduction.
on the federal will be the 4,800.
Right.
So it will be up to her earned income up to 5,000.
There's two things you write off: standard deduction and personal exemption. She'll still get her standard deduction, her wages up to the standard deduction for being single. Her personal exemption goes to you, Dad.
So just have her file hers, and then I file mine and still claim her,
That's exactly right.
and it won't throw any flags.
And,
Not at all.
And make sure you check that box that she can be claimed by you.
Right.
Right, and she can, so.
Okay?
Great, thank you.
You're welcome. Bye-bye. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We were having some technical difficulties at the top of the show. I think that everything's good right now. Give us a call. We sure want to help you. All of our offices are open 9 to 9 tonight. So if you need some help, and on Sunday we have 2 mall offices open.
I was just going to say we have 2 offices open now on Sundays, the McKinley Mall out in Blaisdell and then the Factory Outlet Mall in Niagara Falls. So we got you covered in both ends of the spectrum.
That's true, both ends. All right, let's go to the phones and we'll talk to Tom from West Seneca. Hey, Tom.
Hi, how you doing?
Good.
My question is, my mother, after 20 years living with us, ended up in a nursing home this year, and I've gone through the process of spend down in the Medicaid application, and so we had to pretty much cash in all that she had. They were annuities, and the 1099s are starting to show up now, and I'm wondering if I'm going to have to file any tax return for her.
All right, let me ask this. How much money were all those annuities, do you know?
Probably pretty close to $50,000.
Okay, yeah, you have to file for her, all right? But the good thing is you have a counterbalance as an itemized deduction.
Right, you have all the nursing home and her medical bills, which will offset it. So she'll owe nothing to the federal. And you said, right, she isn't going into a nursing home?
Yes, she is in now.
Right.
And
so
she's private pay,
if she was private pay for any part of the time, they charge you what's called a bed excise tax, which you will get about 95% of that tax back by filing her New York return.
That's right. And you do a 258, IT 258.
What did you say, 258?
258. So you're going to do a 1040 form for her, a Schedule A listing her itemized deductions, an IT 201, and an IT 258.
Wow. Okay.
Okay?
All right. Thank you very much.
Thank you, sir. Thanks for calling. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back with Larry, Jane, Chris, Carol, and you on the other side of the break.
When I wake up in the morning, love, and the sunlight hurts my...
Hey, I'm Esther Gullius, the tax lady from EG Tax. Had a rough takeoff here at the show
today.
Bit
of turbulence.
Our mic went down. It was all lots of fun, but we're back at full strength, and we got all your questions ready to go. 8030930, 8030930, and we're going to go with Mr. Chris. I think it's a Mr. Chris. Hey, Chris, how can we help you?
Hi, Esther. This is my first time calling. Thanks
Yes, sir.
for my call. Hey, I'm an executor for my father's estate.
Okay.
And I'm about to close the estate down with the attorney. But the last thing I got to do is, of course, is the taxes.
Yep.
With some interest and everything. My question to you is in your whole scheme of stores and everything, or your outlets, do you have somebody that's expertise in that type of tax filing?
Well, you're in West Seneca, so we have a number. Most of our offices either have enrolled agents, which would be comparable to a CPA, or a couple of our offices have attorneys. So right in West Seneca, there's a number of people that can do everything.
Yeah, I would ask for Melinda
Schmidt.
Yep.
Hang on a minute. I got a pencil here. Melinda?
Yep. Melinda.
Melinda. Okay. And Schmidt, SCH?
MITT.
Right.
DT. Okay. And where is she at?
Right in West Seneca, at Ridge Road and Orchard Park Road, 2020 Ridge Road.
2020 Ridge.
And their phone number is 677
09
44.
Thank you very much.
All right. Thanks, Chris. Thanks for calling.
Okay.
Let's see. We're going to go to Carol in Buffalo. Hey, Carol. This is Esther. How can I help you?
Hi, Esther. I just have a question.
Yeah.
I'm just wondering if I can. My daughter and grandson live home, and we have custody of our grandson. Can we
Okay.
file? Can we file both of them?
Okay, so let me ask you this.
Extras?
All right, you said your son is living home. How old is your son?
Our daughter.
Oh, sorry, daughter.
Yes, her child.
How old is your daughter?
She's 27.
Is she working?
She's working.
Does she make more than $4,050 a year?
She started probably 7 months ago at work. I'm not sure.
Well, $4,000 is not much.
Right.
Okay, so assuming that she made more than $4,050, all right, you cannot claim her. Now, her son, is it her son that we're talking about?
Yes.
Okay, she would have the right to claim the child first. And I'm assuming if she has lower income, she's going to get an earned income credit if she's working. So it would probably be in her best interest to claim the child because they have money set aside to give to her for raising the child, for having a child live with her.
I see. Okay, so it's in her best interest to claim.
I would do both returns at the same time and see what the better answer is, who claims your grandson.
Right, because do you and your husband have wages?
Yes.
So approximately how much?
Approximately between both, I don't know, let's just say $100,000 a year.
Okay, so you won't get the earned income credit. You would get the child tax credit, the child tax credit of $1,000, and the personal exemption of $40.50. But the mother, let's say she made $10,000, she might have an earned income credit of $3,000 coming, and on the state of New York.
Another $1,000.
And she'd get a refundable child tax credit. So mommy probably is looking at some substantial refunds of money she never paid in. So, and she's the person that steers the dependency because she is the natural parent of the child.
I see.
Okay?
Okay, great. Thank you.
Thank you, dear. Bye. Thanks for calling. I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 cell phone. What people don't realize is that the tax code is set up in such a way, Chris, that people get money even though they didn't pay money in.
Oh, I get that question asked to me all the time. How does someone come away with $12,000 when they don't even make $12,000?
That's exactly right. When there's a earned income credit where it's over $6,000 if you have wages of about $18,000 and 3 kids. Then there's the refundable child tax credit in that situation for children under the age of 17. That's another $3,000, right? So now we're at 9. And if anybody's in college, then there's the refundable American Opportunity
and
Tax
throw
Credit.
in New York State.
Right, and then New York State, and there you go.
Yep.
You didn't pay anything in, they're paying you, and that's the way our tax system is set up. So when you hear people say that people don't pay taxes, not only don't they pay taxes, we pay them.
Correct.
Right?
Yep.
And this is meant to be a way to help a mommy or a daddy who have children living in their home get on their feet so that they'll someday make more money.
But, well, unfortunately, I won't get into politics.
Don't get into politics. Don't get into politics. We're not going to do that. All right, let's go to the phones and talk to Larry from Georgia. Hey, Larry, how y'all doing down there?
Esther, we're doing great. And Esther, let me say, darling, we can hear you all the time.
You can hear me getting all verklempt up here, right?
Yeah, right. And Esther, there are a couple of questions. First, I've got to tell you that, as a compliment, I've been a reliable source told me that your powers as a matchmaker are world renowned.
That's true. I think that I have 12 couples, 10 couples that I've gotten married. I matched this one with that one, and I let the powers that be happen, and then the next year they come in and say, we're getting married. I had a couple the other day that just came in, and he said that he wanted to meet somebody, and she said she wanted to meet somebody, and I mentioned the 2 people, and they're getting together too. So yes, but Larry, you're on my list.
Well, okay, Esther, I'm going to send you a picture of me, but you have to.
All right, you're on my list.
We'll put it on our Facebook page.
But you want
a
Georgia peach, don't you? Because you're down in Georgia, right?
Well. You know, I mean, I'm looking for the person, right?
Well, if you get a nice Buffalonian girls, and there's lovely girls up here, it's a little chilly here, but I suppose you can have them relocate down to Georgia. So thanks for calling, Larry.
actually, I've got a question for you.
Yes, sir.
Question. First, I want to ask you very quickly. One, do you have a Medicare, Social Security specialist I can contact? That's one.
Oh, yeah.
Two, Esther, if I go overseas for a bit and take, say, non-credit or credit, educational program, is that tax deductible? And three, question for you, Chris. Currently, I'm taking the minimum R&D I can, which is about $5,000 a year for my IRA. I'm going to bump it up to $10,000, double it, and in part because I want to have a certain amount of positive cash flow. And speaking with Julie, we thought that because I have my own IRA, a separate one, that I'm going to start taking it when I'm 70. It might be good for me to take something now to reduce my tax liability, if that makes sense.
Okay, well, let's see. We've got to go all the way back to the front. Let's see. What was the first?
First one was taking an overseas course.
Okay.
Yeah.
If you're taking a class that isn't credited, it may be deductible as a business expense if you're doing it because I know you're a real estate expert. If you're doing it to enhance your financial or your real estate background, then it would be deductible as a business expense if it is to maintain or improve your present skills, okay? If it isn't a credited class where you could actually borrow money, like with financial aid, then it wouldn't qualify for the education credit, okay? And then, Chris, you don't think you should take out money in advance?
I mean, Larry, it all depends on your tax situation every year and what your ordinary and your capital gains are. You may be in the same bracket now that you may be when you turn 70 and a half. So I wouldn't take any out right now.
I never take out any money that I don't have to take out, Larry. Why would I give them the money up front? If I get lucky, I'll die first.
All right.
Okay,
and then we don't even know what the tax rates are going to be in a couple
true.
of years,
And
too.
you got, and Trump is promising to reduce tax rates. So it'd be terrible if you take it out at a high rate and they reduce it the year after that, you know?
Good advice. Chris, I'll send you an email on that, and Esther, I'll send you a picture. And
Okay, Larry.
Bye-bye, y'all.
Bye-bye. Bye-bye, y'all. Okay, let's go to Jane. Hey, Jane, in Youngstown. That's where I'm from. I'm from Youngstown. How are you, dear?
Oh, whereabouts in Youngstown do you live?
I live right off of Lake Road.
Oh, okay. Well, I'm out on East Avenue, which used to be known as Poverty Ridge.
What can I help you with, dear?
My question is, I made a sizable donation to the church.
Okay.
The check is dated the 24th of December.
Okay.
But it did not clear the bank until the 10th of January.
Okay, but you mailed that out or gave it to them in 2017, correct?
They received...
Or 16, rather.
Received it in 2000.
Yeah, then it's deductible in the year you wrote the check.
Is or is not?
It is deductible in the year you wrote the check.
Oh, so I can put it on this year's taxes.
That's correct.
Oh, nice to know.
Okay.
Oh.
Thanks for holding so long, Jane. Appreciate it.
Bye-bye.
Thank you, dear. Bye-bye. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on your cell phone with Christopher Fabian. We're out of the office.
Yay.
And by the way, all of our offices are open 9 to 9 tonight and all next week. And through the rest of tax season. And if you need the best tax help for the most reasonable fees, we hope you'll give EG Tax a call. And in between, we'll talk to Paul in Hamburg. Hey, Mr. Paul, how can we help you?
Hi.
Hey.
I underpaid my taxes in 2015.
Okay.
A substantial amount. And I am repaying the IRS at $500 a month.
Okay.
Is that $500 a month deductible?
No, sir.
Taxes for this year?
No, sir. The only thing that's an itemized deduction would be taxing agencies below the federal government. All right?
So if you owed New York State money and you were paying them, then that would be an itemized deduction.
Or if you paid a city tax, like for instance, like in Ohio, they have all of their cities have city taxes, then that would be an itemized deduction. Or if you pay a foreign government taxes, that's a deduction or a credit. But whenever you pay the federal government, it is not an itemized deduction.
Oh. Gee, Thanks, I guess.
Well, that, rather than having them send you a love letter in the middle of summer and saying, Paul, could you please send us back the money? You shouldn't have taken it. It's best to know up front, right?
I got love letters for 6 months before I decided to pay them back.
Well, good. Well, I'm glad you called. Anytime you need help, we're here. Okay.
All right. Thanks.
Thanks, Paul. Let's see. We're going to go to Bonnie. Let's see, Bonnie. Hey, Bonnie. How can we help you?
Hi, Esther. Thank you for taking my call.
Yeah. What you got?
I have. It's kind of a threefold question. I am going through a divorce.
Okay.
My husband left the house December last year. And now prior to this, we had filed last year's taxes or the prior year's taxes together.
Jointly.
And I have a job where, they take out my federal and taxes throughout the year based on my income and my, I file married one for federal and married at a single rate 0 for state.
Okay. Hey, can I ask you to hang on? I think I got a break for news right now. Hang on, and we're going to get you on the other side, all right?
Okay, wonderful.
Thanks, sweet. I'm Esther Gullius, the tax lady. We're going to take a short break. We'll be back on the other side with your questions.
If you see me walking down the street and I start to cry,
I found out my taxes weren't very good. I'm Esther Gullius, the tax lady from EG Tax, and we're going back to Bonnie, who was telling me about her divorce. Okay, Bonnie, now, so I know about your withholding, but what's the question?
Okay, my question basically with that is, last year when we filed, because my husband gets paid with in various ways in his job, he doesn't always have enough taken out.
Okay.
We ended up owing the federal government and the state approximately $8,000.
Okay.
And so now this year, be filing. I mean, we're still married. We're not technically divorced.
I know, but you don't have to file a joint return if you're in a situation where you're in the middle of a divorce, or even if you have a happy marriage, and maybe you have a spouse that is irresponsible in their withholding of tax liability for taxes, and you end up owing a lot of money. You don't have to file a joint return with them. You can file married separate, because once you sign on that dotted line. Of course, it's not even a dotted line anymore. But anyway, I'm going to not digress there. But once you sign the return as a joint return, the liability then becomes your liability as well.
Okay.
So would you advise her?
Oh, I would, yeah. If you don't have to, if the court's not ordering you, I would look at doing married filing separate.
Married separate, Bonnie.
Because it sounds like he almost plays with his withholding.
Yeah.
I wouldn't blame his company. I think it's him who changes his withholding.
Right. So, Bonnie, if you're going to file a joint return and he's going to owe money again, you're liable for it. So,
and even in the divorce decree, if they say, "Oh, it's split between both of you," or he has to pay it, the government doesn't care. If he doesn't pay anything, they're going to come after you.
After you.
Okay. So the money that because it's not all been paid off, and now this year I'm going to file separately.
There you go. But now he left in December of 2016, right?
Yes.
Okay. Well, you don't have children that live in your home, do you?
We have one child together.
How old is that child?
17.
Okay. Next year, if the divorce is not final, even though you're still legally married, if you maintain the household and that child lives with you the whole year, you can file head of the household.
Right. So what do I do this year?
Married separate.
Married separate.
Mm-hmm.
And my question, though, with the monies that were owed from 2015, am I going to be liable when I file my taxes?
Yeah.
Whatever still
Yep,
owed?
you are, Bonnie. But but it's like saying, gee, something bad happened to me, and you go back and do it again. So just file married separate.
Yeah, because if they take, say your refund's $1,000 and they take your $1,000 to apply it to the debt, isn't that better than adding another $8,000 to the debt?
And the other thing is, since you're in the middle of litigating a divorce, mention that to your attorney that you just paid the family liability. So when they're negotiating the settlement, they'll take that into consideration while they're negotiating what he would owe you.
Okay.
Okay?
Okay. Now, I was told, one more question. I was told when because we were having problems when we filed the 2015 taxes, but I was told that I would be penalized if we're married still and we file separately. Am I going to have a penalty for that?
It's not really a penalty. What it is there's some things that aren't deductible when you're filing a separate return. Like, for instance, student loans, you can't take that as a deduction. You also can't take a daycare credit, but your son is too old. He's 17, and so you wouldn't get that anyway. And you're not paying student loans, are you?
I do have student loans.
Are you paying student loans?
What's that?
Are you paying the student loans every month?
I have had a forbearance.
Okay, so you aren't. So that doesn't make any difference. So the only other thing would be if he itemizes, you have to itemize. But I'm going to tell you, Bonnie, what Chris is saying is absolutely right. If the guy is under withholding by $8,000, the little bit of adjustment you're going to have to make for married filing separately doesn't even hold water. So, and you work, right, Bonnie?
Yes, I do.
Yeah.
Yep.
So if you want more information, call us at the office, but I think you should definitely look at filing separately.
Oh, okay. And I will definitely call you at your office.
All right. Thanks, Bonnie.
And have an appointment. Thank you.
Thank you, dear. Bye-bye. Yeah, I mean...
And there's no child tax credit now because such a son is 17. So,
right.
I mean, just to avoid the liability, I would...
There are many times when you want to file a married filing separate returns, and it doesn't really have to mean that you're mad at your spouse either. Sometimes you just do better married filing a separate return, and you really have to do a tax return both ways. It's really... Our program is so wonderful because at the end of the program, if you just go, we have this special place to look, and it tells you how much you're saving if you'd go married filing a separate return. So there are times when it's better to file married separately, but certainly if you are married to somebody who's not handling their tax situation correctly, you don't want to get into bed with them in that situation.
Right. And depending if this was an ongoing thing from 14, if this was brand new in 15, he started doing this and she had no clue, she could almost do an innocent spouse, say, we're going through a divorce, I had his finance was his money, and she may get deemed
some relief
from that debt.
Yeah, because that's something else we can do. Okay, we got to go to Dennis. He's been waiting for so long. Hi, Dennis. How can we help you?
Hi, Esther. I have a quick question about dependent credit.
Uh-huh.
My mother-in-law, she's 86 years old.
Okay.
Excuse me, 86 years old, and she receives Social Security and a pension, but does not file a tax return.
How much is the pension?
I'm not sure. It's more. It's probably like $800 a month.
Okay, so $9,600. Okay. She doesn't have to file if there's no withholding. She's under the minimum filing requirement.
Now, could I claim her as a dependent if she's in my house?
Because she made more than $4,050 in taxable income. So while she doesn't have to file a tax return, she also can't be claimed as a dependent.
Okay. So she has to have basically zero income.
No, $4,050 taxable income or less.
Okay. Now, she doesn't pay tax on her pension.
I know, but that doesn't mean... So
it's
here
page
we're
one
doing
of
apples.
the 1040.
We're doing apples and oranges. She doesn't have to pay taxes on it because she's under the minimum filing requirement. However, because she is over the age, she's not your child, and because she has more than $4,050 in
on page one income.
Right, taxable income, she can't be claimed as a dependent.
I see.
Okay.
Yes, thank you.
All right, thanks, Dennis. Bye-bye. Let's see who we got. We got Larry from Wheatfield. Hi, Larry. How can we help you?
Hi, how you doing?
Good.
I'm having my taxes done at your corporate office on Monday.
Yep.
And I have all my paperwork except for the insurance form that states my wife and I had insurance all year. I think it's a 1095B.
Yep. You get it through your employer, your insurance?
Oh, I get it through the Essential Plan.
Okay, you don't need it because we don't need that form as long as it's from the Essential Plan. It's like Medicare.
Right. Yeah, you're paying the $25 a month, similar.
$20 a month, correct?
Yeah.
Yep. So, no, we don't need the 1095B.
Right.
All right, so I can come mid-Monday. It looks like I'm all set.
Perfect.
I just wanted to say that Tim helped us out with that Essential Plan. Anybody that's listening, he was a lifesaver for my wife and me, so kudos to that free service you offer.
Oh, thank you, Larry. I mean, he does a great job, doesn't he?
Oh, my God. I was looking through that. I didn't even know about the Essential Plan. I'm glad I called him up and stopped in to see him, or I would have went out and got some crazy other insurance. We qualified for the Essential Plan and took care of us. So kudos to you guys.
Oh, thanks, Larry. Thanks for calling. See you Monday.
Bye-bye.
Bye-bye. And when Obamacare came into existence, and we knew that we had to say to people, I'm sorry, you owe $2,000 in penalty. We thought, this is not going to be good for our business. Who in the world wants to tell people they're getting penalized? So we thought what we're going to do is we'll get navigators who will help people to get insurance so that we've done everything we can so that you don't get penalized.
Yep.
And
or get a reduced insurance.
Or get a reduced insurance. So we have two wonderful navigators at our corporate office, Karen O'Brien and, like he said, Tim Eliason. And there's a free service that we offer. So we don't get anything for doing this.
Nope, nothing.
But we get nice compliments.
Yes.
Right? I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we're going to go to Mr. Chris in Lancaster. Hi, Chris.
Hi, Miss Esther. How are you?
I'm good. How about you?
Not too bad. Quick question. I know a couple of acquaintances and friends who itemize everything for their taxes. And I mean everything. They say, this receipt here for gas is for work and this food is for work as well. How feasible is that to do when, as opposed to doing it?
The short form?
Yes.
Yeah. Well, it all depends on their jobs. Where someone who's an accountant and they just go to their desk every day and they work 9 to 5, then go home, their gas isn't deductible, their meals isn't deductible. None of that would be because that's commuting and lunch is never deductible. But if you're in sales and you drive around, then your mileage would be deductible. You take clients out to lunch to try to wine and dine them, to have them sign up for you so your pay increases. Those meals are deductible.
I see. So if a nurse goes out and buys $200 worth of scrubs,
that's deductible.
That's deductible.
Right. In other words, here's a good way for you to think about it. If it was necessary for you to do your job and it cost you money for you to perform that function, then it's probably deductible in some form or fashion.
Okay. And very quickly, then one other question I have is that what if I were to get a job across the border in Canada and still live in the States?
Okay, well then, first of all, Canada's got to let you stay there. They're not. Canada's very protective about their jobs, so that's number one. But number two, you'd file a Canadian tax return on the income that you earn in Canada, and then on your U.S. return, you would get a credit because you also have to pay taxes in the United States for income earned anywhere else. But you are going to get a foreign tax credit for taxes that you paid in a foreign country. So the one pretty much, in most cases, negates the other.
Right, and be careful with the exchange. It may sound like you're making more money, but with the exchange, you may not.
Right.
Especially being taxed twice as much. Almost.
No, you're not. Let's say that your Canadian taxes are, just for hypothetical, 10,000 Canadian, which equates to 8,000 U.S. On your U.S. return, you get an $8,000 credit against and you're going to convert the wages back to U.S. as well. So maybe on your U.S. return, you're going to get an $8,000 credit on the U.S. Income tax return, which pretty much negates the taxes that you're going to be assessed in the United States.
I see. Okay.
Okay?
That sounds great. All right. Thank you for your help.
Thanks, Chris. Yeah, I mean,
it's tough. It's a interesting thing. You got to really put pen to paper.
Okay, let's go to Gordon in Williamsville. Hi, Gordon.
Hello. How are you doing today?
I'm good. How about you?
Good. Just a quick question for you. I have a few years on me, and I have the love of my life lined up. I have yet to marry her, but I was curious to know if I wanted to transfer some funds to her, what would be the best vehicle to use to get that accomplished without having the bequest, if you will.
So you just want to give the person you love some money.
Exactly, and I just don't want it to be taxed away.
Okay, all right. So anybody you give money to, Gordon, you can give anybody. Me and Chris, we're waiting down here. We're over at the radio station. Give anybody $14,000 a year, up to 14, and you don't have to file a gift tax return. And if you give a gift to me or your girlfriend or whoever your special person, that gift is tax free to them and not deductible to you.
Okay, so
but you got to look if that's in a regular checking account or savings account. If you're taking it out of your pension, you're going to pay tax on that money.
Yeah, no, it would probably be either cash or out of my insurance or whatever. I just wanted to make certain that it could get there, and there's a limit of $14,000.
Well, you actually could give more than that, but then you have to do a gift tax return, and it just adjusts your unified exclusion upon your death, which is $5.45 million. So not most of us are going to have to worry about that. So
the lottery ticket comes in.
Yeah, right. So you can give her more if you want. I think it would be good that you document what you did with it. Maybe put a little letter in there. This is for you because you're paying off your student loans, and you have a good paper trail so nobody thinks that it's from illegal activity.
Okay. That's splendid, and it would be a $14,000 maximum. Should I put that through my executor or something, or
no? If you're doing it while you're alive, you just write the check yourself and give it to her.
Oh, okay.
All right, Gordon.
All right. Thank you so much.
Thanks, Gordon. Thanks for waiting. Bye-bye. Let's see. We're going to go to Pete. Hey, Mr. Pete, how can we help you?
Oh, thanks for taking my call. My teenage daughter got a part-time job this year. She made $2,100.
Uh-huh.
I'm going to claim her as a dependent on my taxes, but can she still file a tax return?
She sure will. She's going to get her refund. She's going to file her own return. She's going to claim 0 for dependents because you're getting her dependency exemption. And if she only made $2,100, that means that she owes nothing on New York State as well. So she'll get a full refund on the federal and the state.
Okay, thank you very much.
You're very welcome. Thanks for listening. Okay, and let's go to Carrie. Carrie in Buffalo. Hey, Carrie, how can we help you?
Yes, I have a question that's kind of complicated. At the beginning of 2016, I noticed that on my mortgage statement that my principal did not seem to be decreasing. And after meeting with the bank that holds the mortgage, it turns out they had made a mistake and had to correct it. And what they did was they applied the overpayment of interest to the principal.
Okay.
But they classified it as a loan modification. Do I have to claim that interest that they applied to the principal as income?
Did they send you a 1099?
Yeah, I don't have it yet.
They're going to. All right, so.
Well, besides the 1098 that you normally get, they're going to send you a different form saying. Did they tell you what they're sending you, like a 1099 miscellaneous? Are they sending you?
They didn't say.
Okay, so let's see. So they took the error, the money that was misapplied that went to interest, correct?
Right, and applied it to the principal.
To the principal.
And this all happened
if she deducts the interest, then that would be taxable.
Right, I was just going to. Was this going back to like 15, or was this all just in 16?
No, this was actually for 15. It was discovered in the beginning of 16.
Yeah, then if the interest is deductible, which it should be, then the reassignment to principal would be taxable. So It'll be when you get that, Carrie. Why don't you give me a call and tell me if you got the 1099?
Okay.
All right. I'm at 632-7886. Now, here's another thing. What bank was it? May I ask?
M&T.
Okay, because, it's really important that people keep track of their figures, and that was very sharp on your part. It was very sharp on your part. Because if you're making payments every month, you should see a reduction in your principal payments.
Yep. Right.
So, call me. I'd like to see what they send you, okay?
1099.
Yeah, okay?
Okay, thanks.
Thanks, Carrie. Bye-bye.
Bye.
All right, and we're going to go to Ed. Hi, Ed. How can we help you?
Hi, just to clarify something. If I'm only getting Social Security and minimum required distributions for 401ks, do I still have to, make out my taxes?
It all depends what your RMD is. How much?
Oh, boy. It's probably about total between the two, I think it's about, say, $6,000 a year.
Okay, if you're getting only $6,000 from a required minimum distribution, which means it's a pension or an IRA, and no other source of income except for that and the Social Security, you don't and there's no withholding on the RMD. There's no withholding, right?
You're correct. That's right.
All right, then you don't have to file.
Yeah, in other words, I was paying taxes, and somebody said, well, that's crazy because you don't meet the minimum.
Well, Ed, let me ask you a question. How old are you?
I am 70.
If you have minimum distribution,
right.
sorry,
70.5.
you could probably take out another $5,000 tax-free. So you could take up to about $11,000 and pay no tax.
And anybody listening, if you're in Ed's situation where you don't have to file taxes because if you're filing a joint return, you're talking about more like $18,000 you could take out tax-free. Make sure you start withdrawing more than your required minimum distribution because it's going to be tax-free.
Well, I guess Fidelity said they have these actuarial tables and they adjust them every year.
Right, but you can that's your minimum. You can take out as much as you want. You have to take out the minimum.
But Ed, let's just say you got $100,000 in there, okay? If you could double it and take out, or maybe triple it, take out $15,000. Are you married?
No.
Okay, no, let's keep it at 10 then. So let's say you could take out 10. You could knock down that and get it completely out tax-free within 10 years. And then you could just set the money into another investment, and it wouldn't be taxable when you take it out.
Right,
and you still don't pay taxes.
And then your beneficiaries wouldn't have to worry about the taxes on it either.
I misunderstood them. I thought the way they talked, that's a max.
No, it's a minimum. It's a required minimum distribution, RMD. So the thing is, and anybody listening, if you're taking out the minimums and you can take out more so that you're taking out that taxable money tax-free, then you can put it into any investment that you want, and your heirs don't have to pay taxes on it when you're gone, and you got you can set it aside in something else, and you have a nest egg that you can draw on if you need it.
So if I would pass away, God forbid, and then they would, I have them as beneficiaries. So if they make an application to Fidelity and they get that money and split it, they'll have to pay taxes on it?
Yes, sir.
Oh, I didn't know that. Wow.
Yep.
Hey, how long, incidentally, just a quick question, do you have to keep your tax paperwork?
3 years.
Right. The statute of limitations is 3 years, but you want to keep papers that verify dividends. If you're holding stocks and you had reinvested dividends, it's good to keep those as a track record to make sure that your basis is correct. But it's really, the statute is 3 years.
But you have to keep the other information for forever?
No, the statute of limitations is 3 years, and you want to make sure you keep the basis on any capital assets that you're going to save until the asset is sold plus 3 years.
Okay, I thought it was 7. You were banning that about 7 years, but 3's okay.
Yeah, okay.
Nice to clean everything up.
All right, thanks, Ed. I'm Esther Gulius, the tax lady from EG Tax, and we do taxes, and we want to help you. And if you have any questions, you can email us through our website. Go to egtax.com, ask the tax lady, and I'll be very happy to help you. Any of our staff would be very happy to help you. We have 33 area offices all the way from Jamestown up to the shores of Niagara, from the over by
Are you
our
going to
west
start
side,
singing?
From east side, west side, we're all over town. And we have a great staff, and we certainly would love to help you. If you have questions, Don't overpay your taxes. I just had a lovely couple that came in the other day, and they used TurboTax, and I looked at the return, and she and I in 2 seconds I said, you have $1,100 refund coming back. She says, how? And I said, you took $10,100 out to put a down payment on out of your IRA to buy your first home. She said, yes. I said, there's an exception to penalty. You gave yourself an $1,100 penalty. There's an exception for. And didn't you move from New York City? Yes. Did you do the moving expenses? No. So I got her back $1,500, and I said, I've just paid my fee for 15 years.
Yep.
And that happens all the time. So if you want the best tax help with people that care, give EG Tax a call. Until next week, I'm Esther Golias and Chris Fabian. We're going to run back to the office and do some work for the day. Have a great week. God bless you. Bye-bye.